What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Tuesday, May 21st. All right, guys, Tesla here today, down $2.51 per share. That's minus 1.41% in regular trading hours, essentially flat, up a tiny bit here after hours. Either way, wherever that ends up here tonight, take that with a grain of salt. Volume is already very, very low. So that movement has to be taken with a grain of salt, whether it's, of course, in your favor or going against you. But listen, let's get as much of a feel for Tesla as we possibly can, pulling out everything that the market was willing to give us today. We'll start with the volume profile, getting some directional bias out of that if it's available. We'll take a look at the psychological levels that, of course, big money's watching, so we need to be as well. Implied volatility we'll look at, particularly important for you options traders. We'll look at the expected move for tomorrow. We'll do some math on that. And then we'll take a look at the directional bias coming out of the chain. So let's get started here with the volume profile analysis on the 5-minute chart. Listen, by the way, guys, I cover Tesla every single day. So if you like that, if you appreciate that, I hope you subscribe to the channel. My goal here is 10,000 subs. I appreciate you doing so, and I will keep the Tesla videos coming. So let's take a look under the hood and see if there's any bias to be had here on Tesla today. Now, you notice that we got quite the sell-off off the open. So you bears, ultimately, what are you guys really looking for? You guys would be looking for tremendous bearish bias, ideally, at least off the open, if not at least at some point during the day, because it was, a minus 1.4% red day. So if you have a red day that's not tiny, like today, meaning like kind of like average, an average red day, you would ideally want to see some average bearish bias in the volume profile. Anything less than that is not ideal if you're a bear. If you're a bull, what are you really looking for? Well, the price action already happened. And on top of that, you can't really expect bullish bias on, a 1.4% red day. It'd be great, but you can't really go into it expecting that. So bulls, you're kind of looking for no bias at all, ideally. You're looking for the bulls to at least hold off the bearish bias when you look under the hood in the volume profile, rather than just having massive bearish bias that, or at least, some bearish bias that kind of confirms the move today. So if we look at this, you can see that off the open, first of all, the context of this is we expect high volume on the first bar. The second bar tends to begin to fade. We held a little bit higher volume into the second bar, which is, slightly unusual, but it's not like we're seeing 5 bars in a row of elevated volume off the open, which would be highly unusual. And then we start to see the volume fade. A couple of red pops, okay, and then it fades off to green. A red pop fades off to green. This is very wishy-washy here. This is by no means clear, massive bearish bias, not even close. But it's kind of there, okay? Is it there supporting the size of the sell-off we saw today off the open? In my opinion, not really. It's pretty clear there if you look. It's not like we're seeing such massive bearish bias that fits that. But there's a little bit there. So, honestly, it's a little disappointing for the bears because it's not more. But for the bulls, it's like, okay, well, at least it's not massive. But it is still there, which, on its own is kind of like, well, that's not great. But moving on through the day, this is all very offsetting of each other. This here, it's not enough to assign either direction, not enough to assign, not enough to assign. And then into the close, it's actually very contextual. This red bar here, though, understand that's a rebalancing bar, so no one get too excited or too upset. That I tend to ignore. It's just algorithms triggering after the bell rings, and you can see very little movement is actually going to come as a result of that. So let's move on to something a little more simple and highly effective, the self-fulfilling prophecy psychological levels, right? These are the levels that everyone really is kind of paying attention to, at least the biggest sample size we can possibly pull, the most popular time frames, the most popular and simplest indicators, the white line, the 50 period, the gray line, the 200 period. All we're interested is the psychology around what everyone's watching. Now, you guys remember the weekend video, right? It was great. We had bounced sloppy, but we bounced off the 200 period on Friday, ripped upside through the 50 period and held it. Today, we're ideally looking for that to hold. Well, we ripped down back through the 50 period here off the open, and we kind of sloppily held the 200 period here on the 30-minute throughout the day. So bears, that's not bad to see, right? You guys ripped down through the 50 period and held. You never really got a retest, but you held low enough where we can call that a break, obviously, right? That's a pretty clear break and hold, but understand you guys still haven't seen that retest and confirmation. Okay, bulls, not great giving up the 50 period. That gives out positioning. However, on the 30-minute, if we're going to give up positioning on any chart, I'd prefer it be the 30-minute because it tends to change the quickest. So you can redeem yourself the quickest as well. Tomorrow, bulls. Any downside test of that 200 period, the gray line, I would love to see that hold cleaner than what we saw today. Okay, bounce away on high volume. But the goal, if you're a bull, is to rip up through the 50 period hard on high volume. Kind of like what we saw on Friday, but then ideally rip up through, see a low volume pullback, test the level again, or at least I suppose for the first time, and then boom, high volume bounce away to confirm. Bears, any upside test of the 50 period, you simply want to see that reject hard. And bears, your ultimate goal is to do what you were unable to do today, get down through the 200 period hard, retest on low volume, and then boom, reject on high volume, claiming the 200 period kind of more officially as resistance, at least in the short term. Now let's move on to the 4-hour here and take a look. You guys can see that back on Friday we had claimed the 50 period, while today we barely gave it up. We closed kind of right on top of it. So let's actually zoom in and get a better look at that here. Now the reality is it broke, but guys, it was so indecisive upon closing. Again, we closed like right on top of this thing that this is anybody's ball game on the 4-hour here tomorrow. Bulls, it's so clear. I just want to see the 50 period hold this support and rip up away from the level. Put some distance in between. Bears, you guys might have a small advantage here considering the 50 period's descending. Okay, it's kind of already in position for you. Granted, it's not below the 200 period, which is kind of the ultimate positioning. Not for the sake of the crossover, but just for the sake of if the stock's lower, the 50 period is more reactive. It acts quicker, right? So it tends to go from bottom to top, stock lowest, then 50 period, then 200 period, all descending, stock rejecting off the 50 period as it moves lower. That's like the bearish dream. That's what you guys really want to see. So it's not like you're setting up for perfect positioning within a couple of days, but bears, if you guys could reject hard off the 50 period, that would be great and set you up potentially for a near-term test, downside test of that 200 period to get closer to that goal. Bulls, all we really need is a hard bounce away from the 50 period, treating it as support, and then eventually, if we can get both of these ascending with the stock, maybe we can start to enter that period again, at least on the 4-hour, where you see two from bottom to top, 200 period, 50 period, stock. Stock bounces off the 50 period, all of it's ascending. That's great, okay? But it takes a decision here, which is coming tomorrow. All right, now, the most important chart of all, as if we haven't already been looking at important charts, but I promise the daily is the most important. It's also the easiest to follow typically. So this is really simple. You guys can, let's actually zoom in a little bit here. You guys can see here that we're currently about 2% away from the 50-day moving average, and we're currently around 175 and between 170 and 180. So there's a little bit going on here, but it's still very simple. Bulls. Any downside test of the 50-day moving average, it's also right around 170. I want to see that region hold hard as support. But the ultimate goal in like a single day, if you're a bull, it would be wonderful to see a break upside and hold of 180. We've been struggling with that for a week, right? I mean, arguably going back a little longer than that. A breakup, close above 180, ideally as early in the day as possible, and then holding above that level through to the close. That would be great. Okay, bears. What's the ultimate goal? The ultimate goal is to get downside through the 50-day moving average and start treating that as resistance. It's 2% away. There's no reason why, as a bear, you can't expect to at least look for that on each trading day, because that's within range of what we tend to see on Tesla. So a downside break through the 50-day, a retest, claim it as resistance. It can all be done in the same day. Bears, that's really what you're looking for. Bulls, you want to see that hold. If not, get up through 180. Now, implied volatility. This is especially important if you're trading options. You can see here, compared to the last week or so, it's a little higher, but not tremendously so. Compared to the last month or so, we're in, I would say, the mid to low range. And compared to the last 3 months, I would say we're in the lower range. Okay. You always want to compare IV to your intended trade time frame. Okay. And ideally, most people are going to look to buy options when IV is as low as they can get, as long as they also have a strong directional bias, because that means you're paying the least amount of Vega value up front, but you want to compare IV to your intended trade time frame. So if you're looking to buy options and then hold them for, you're thinking maybe 2 to 3 months, what's IV for the last 3 months? Okay, is it low or high compared to that time frame? When you're buying options when IV is high, you're paying more Vega value up front. There's inherently a little higher risk of IV crush. Okay, now, expected move. Let's take a look here. We do not have the luxury of daily expirations on Tesla. I think we will, probably within the next decade, but not yet, so we have to do the best educated guesswork that we can. That's just what trading is here. And we look, the next expiration we have is May 24th. That's Friday. The expected move by Friday's close, we're going to do tomorrow, but by Friday's close compared to today's close is plus or minus $7.35-ish per share. Now, we have Tuesday, Wednesday, Thursday, Friday left, so we divide that by 4 trading days, and then we add back 50%. That first calculation assumes 4 green days or 4 red days in a row. That's silly. We don't want that. So we add back, in this market, I'm adding back 50%. That seems to be working the best. And we get a plus or minus expected move for tomorrow's trading day of about $2.76 per share. Now, that's very specific, but that's just the one standard deviation approximate expected volatility that the market is pricing in with our little bit of educated guesswork. It's kind of like the best we can do here. Now, you might be thinking, well, what about directional bias? And we'll look here at volume in a second. That expected move by design does not price in directional bias. It's the expected volatility, which is a different look, right? Because to trade options effectively, you want to have a strong directional bias, but it's not enough, right? You also have to have a bias in terms of volatility to position yourself the most effective way. Okay, so you need to know where the baseline is in terms of volatility expectation. And then you also want to have a strong directional bias, and then you can position yourself to capitalize on both of your opinions, not just directional, and then you fall victim to whatever happens with volatility. You want to also position yourself and take advantage of your volatility bias, which is why it's important to know where the baseline is, which is what we just did with expected move. Now, directional bias. We look at volume, okay? I've been tracking this for years on Tesla, every day. I mean, I think it's really interesting to look at, and you start recognizing trends over time. You'll see, it's really interesting. You'll see like for example, lately on Palantir, for the last few months, maybe even going up toward like 3-4 months, we have just seen massive bullish bias in the chain. It's really interesting. And then you'll go through periods where a certain stock will just see huge bearish bias for like weeks or months on end. And it tends to go through these flows, and it really gives you insight into how the traders are feeling on even specific time frames when you break it down by delta range, which we will do here. And it's easy to track too, and I think it's well worth doing because honestly, guys, most people won't do this. So if we do this, it's another advantage we can stack. So we have just under 1 million total contracts traded here today. 577,000 of those were calls. 421,000 were puts. So a slight call side bullish bias here on the overall today. If we break that down by time frame, we go to the 0 to 20 delta range. Those are going to be the short-term speculators. All right, we had 212,000 calls, 150,500 puts. So it's not tremendous, but there is a bit of a call side bias, bullish bias out of the short-term speculators here today on Tesla. But then, you go higher, I suppose, in the delta ranges. And those are going to be the closer to at the money and then in the money contracts. So naturally, they become more and more expensive. That's why you see volume taper off, because people buy less of them. And interestingly, once you get past at the money, you start to see it lean a little bit and then a little bit more bearish. And that's going to be the more mid to longer term perspective being priced in today, because those are the deeper in the money, which naturally, of course, expirations are going to be all over the place. But naturally, when you go deeper and deeper in the money, the average expiration of the contracts traded tends to get longer, okay? Because You know, a lot of times when you're dealing with the really short-dated options, the average expiration, or I'm sorry, when you're dealing with the really far out of the money options, like the 0 to 20 delta range, the average expiration is going to be quite a bit shorter because you're dealing with the short-term speculators, at least the biggest concentration of them, which is why it's so interesting and why we focus on the 0 to 20 in these videos, primarily geared toward like tomorrow, the next day. So that's what's going on here today on Tesla, guys. Listen, if you're appreciating the daily Tesla uploads, I will continue to cover it. The best thing you can do for the channel, the absolute best thing you can do is free. Takes half a second. Just please leave a like on the video and then get out of here and enjoy your day. I greatly appreciate it, and I'll see you in the next one.